Joining me now, Lorenzo Simonelli, the CEO and chairman of Baker Hughes, fresh off of Q4 earnings that were much better than expected. Lorenzo, it's great to speak with you today. Thank you for taking the time.
Good to see you, Morgan.
So let's start right there with fourth quarter earnings and how that sets you up for 2025, especially since, once again, the star of the show was really this industrial and energy technology segment, the IET segment, which makes things like products and machinery and technology for natural gas.
Yes, first of all, very pleased with overall performance in 2024 for Baker Hughes, and across both of our segments, continuing to see the margin accretion that we've stated before, and also the activity levels. And as you look at industrial and energy technology, another record-setting margin performance. And also, as we look at the last 3 years, we've been able to bring in over $40 billion of orders, and last year marking another $13 billion of orders. And we're really seeing tailwind in the activity of compression, liquefaction, where we produce compressors, gas turbines, we've got pumps, we've got valves. And this is going to continue as a theme as we go into 25 and also 26, as we also start to see the US LNG FID start to come back. And over the course of the next 2 years, we see over 100 MTPA of FIDs that are going to be taking place.
What is propelling that demand?
It's the thirst for energy. And as you look at the consumption globally, and also the opportunity to take natural gas, liquefy it to Southeast Asia, to Europe, when you think of also the increased demand from generative AI, and the requirement from data center perspective. Overall, as you look at the predictions, there's going to be an increase in energy demand of 10% over the course of the next decade. So that is something that, as population continues to increase, we continue to consume more energy.
And of course, AI, we know this has been a conversation as well, the thirst for power tied to AI, particularly in this country, in the US too. So when you think about infrastructure and this demand, how much of that is domestic, how much of that is international moving forward, especially as the U.S. does look to now export more LNG to places like Europe?
I think we've got a lot of opportunity because of the abundance of natural gas within the United States. And again, it's affordable, secure, and also from an emissions perspective, lower than coal. So we see a lot of opportunities from a U.S. perspective of continuing to export LNG. And as you look at the projects that are undergoing, as well as new opportunities, you could have as much as 250 MTPA from the United States being exported and provided.
And on the oilfield services side, what are you seeing? And we've heard from both the CEOs of ExxonMobil and Chevron here on CNBC just earlier today. And what they've talked about is the fact that they can continue to maintain and even grow production, but do so without spending more money because the process of producing and extracting that oil is getting more and more efficient. What does that mean for Baker Hughes?
Well, it fits right into our strategy and being able to do more with less, and it's the mature asset solutions. When you look at Baker Hughes and our oilfield services and equipment segment, over 50% is related to the production side. When you look at electrical submersible pumps, you look at chemicals, and there is a theme that we've been calling out for the last few years that's continuing, which is utilizing the assets and getting more recovery from the assets. So it really fits into the mature asset solutions that we offer at Baker Hughes. And we've seen a more stable and growing opportunity for us in that section.
What does that mean in terms of the services you can offer and the role something like AI would play in it?
So AI will be able to, again, efficiently drive productivity and also help recovery. So we apply, when we're going through directional drilling, the aspect of precise drilling. So you go to the spot with the largest recovery. When you look at our products that we provide, it's again uptime from an electrical submersible pump and being able to use the data analytics and also the algorithms and generative AI to make sure that you're predicting, anticipating, so you don't have the downtime. So across our portfolio, we actually have a number of AI, generative AI analytical tools that we provide to our customers as software.
We've seen a flurry of executive orders come out of the Trump administration since January 20th. We already touched on it a little bit with LNG, but we know that this is an administration that wants to see drill, baby, drill. Do you expect that to happen? How are you planning for the possibility of more production coming online, if in fact it is going to come online here in the U.S.?
We do see slight production increase in the United States, and I think the administration theme around energy security is one that fits again well from a Baker Hughes standpoint, and our sustaining of the production that's in place and assisting if there's incremental production that's going to be happening. I think the E&Ps will remain, again, disciplined with their capital deployment, and it's all going to be a function of what happens from an oil market perspective and the pricing.
In terms of crude pricing, is there a level that you watch closely where you say it starts to fall to here and we know that production is going to start to come off?
You know, there's different theories. I think right now we're range bound, and if you look at the 65 to 80, people seem comfortable with that range. Again, I think it's probably a better question for some of the E&P companies. We are focused definitely on helping them be as productive as possible.
And finally, there's a lot of focus on trade policy. Looks like tariffs are going to go into place on both Mexico and Canada this weekend. Unclear yet whether that's going to include crude oil. What would that mean for the energy market, and how do you plan for something like that?
Again, we've looked at this before, and it's not new that tariffs have been talked about. We've got a supply chain that is very versatile, and we simulate different things. And so we look at it as being immaterial from a Baker Hughes perspective, and we will navigate the course accordingly.
Lorenzo Simonelli, CEO of Baker Hughes, thank you so much for joining me. Appreciate it.
Thank you.